Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Good morning, everyone. Hello. This is Kathy. Good morning. Let me know that you can hear my voice and let me know that you all are here. Please say good morning. Good morning. I've got my cup of coffee. I've had a very, very busy weekend running around with the kids up in the Poconos. So I am definitely looking forward to spending some quiet, what I consider quieter time and more calmer time talking to all of you about the markets. Tell me where you're coming from. Hello, Joseph from Kenya. Thank you, Andy, for letting me know everything is coming through loud and clear. Good morning, Cheryl and Park. It is in the U.S. Columbus Day, which is a holiday for banks, but it is not a holiday for the markets. The markets is still open. So I'm going to walk you through, as usual, all of the big events that are expected in the markets this week. Boris will come in and live trade with you as usual, and look for opportunities in the equity markets, the indices, as well as in gold if he sees anything interesting. So that's something that we're going to be looking forward to as well. And just give me one more second. Let me look at one thing. So yes, it's going to be a regular trading day for us. There's going to be nothing different for Boris's live trading session. Stocks and bond markets are open, even though actually no, there's some bond markets closed, I believe. Let me see. I'll have to look into that. I don't really, bond futures are moving, so that's not an issue. Let's look at this. Let's see. CBOT, holiday. Good morning. Yes, that's a really nice big cup of coffee. I definitely need it after the lively weekend that we had. Yeah, everything's pretty much open. So, it's a normal trading day, and we are seeing movements in the market. This is a busy trading week for the markets. We have a lot going on. We have a lot to talk about. And, as I said, Boris is going to be live trading that with you, live trading stock indices and gold with you later this morning, closer to the New York Open. And yes, I will give you my outlook for dollar CAD along with all of the major currencies. Just saying hi, hello, getting everything organized. Sometimes Monday, my kids come into the office and they move around everything and it gets a little nutty. Okay, so let me share with you. Let me start by sharing with you my heat map. And this is the heat map that all BK traders get. We update this and we talk about, what's going on. And these are my fundamentals views for the market in the week ahead. If you click on any of these, there are more details explaining what I think for the monetary policy, data, and the general outlook. So starting off with the US dollar, we know the US dollar is very strong. The US dollar is extraordinarily strong. And that is because, there is, significant upside surprises in US data in the form of the non-farm payrolls report, as well as the inflation report. And, nothing last week cast doubt on that. And as a result, the US dollar is starting off today stronger against all the major currencies and ended last week strong as well. So the question in everyone's mind is, will the US dollar rally? Can the US dollar rally? How much more can the US dollar move to the upside? And, with regards to the US dollar, it is important to realize that the messages from the Federal Reserve, from US data, is very clear. Last week, we also had the Fed minutes. And the Fed minutes made it very clear that a lot of the Federal Reserve officials actually wanted a smaller move last month than what we, or a last Fed meeting than what we actually got. The Federal Reserve delivered 50 basis points of easing. And, according to the Fed minutes, there was more support for 25 than 50. So it definitely seems like Fed Chairman Powell strong-armed the rest of the Federal Reserve voting members to favor a bigger move. And that also indicates that they're not going to support 50 this time around if they didn't want to last month when data was weaker. So they're not going to want to support 50 basis points this time around because data is actually better. And we've heard from Powell when he last spoke the similar message. We also saw it in data. So pretty much everything points to a smaller rate cut. Now, the US dollar is getting tired. The rally has been very, very strong. And if you look at, I'm going to pop on the dollar index here, you will see, let's go to the daily charts. I'm going to add on my moving averages. We are at the 100-day simple moving average in on the daily chart. And this is not far from the 50% retracement of this entire move. So the dollar rally is getting exhausted. This 50% fib is at 103.34. So we are at extended levels. And if you like oscillators, you will see if we add in the RSI, for example, you'll see that we're entering. Let me move this RSI down. We're entering overbought territory in the RSI. We've got the 100-day SMA on the dollar index. We have the 50% fib of, where is this? Of the April decline that stretches all the way down to October. So all of this suggests that, yes, maybe the dollar could extend a little bit more, but it's getting overstretched. So the question is, how much more can it rally this week? Well, first of all, we know that U.S. yields are up, which is supportive of the dollar rally. But even though U.S. yields are up this week, we may not necessarily get or we certainly do not have the big pieces of U.S. data that could really extend it much higher. The most important, I'm still bullish dollars because, the data, because all of the reasons I just lined up, which is that the data on the labor market front, the inflation front, what the Federal Reserve officials have been telling us, all of that is dollar bullish, and U.S. yields continue to be up. And I am a, trend trader. And given that I'm a trend trader, I'm going to stick with the trend until it bends. And so until we get the point where the dollar actually starts to reverse, we're going to remain bullish dollars. The most important piece of U.S. data this week is going to be retail sales. And, there's basically there's four main events that are important to the dollar. 5, actually. So it's non-farm payrolls, the inflation report, the Federal Reserve meeting, retail sales, and the first quarter of GDP. Of course, the other numbers are important as well, like ISM services, ISM employment, but there are only a few pieces that tend to be very, very market moving for the dollar. And retail sales is one of those because if you think about it, consumers are the backbone of the U.S. economy. And every economy for that matter, because without spending, there is no growth, and businesses obviously can't raise prices if they are not experiencing some sort of spending, because if they are seeing a decline in sales, they're most likely going to lower prices than raise prices. And if we don't have spending, we don't have growth, spending is a component of GDP. We don't have growth, then we can't have we don't have a good economy, and the Fed needs to lower interest rates more aggressively. So retail sales is a very, very important report. But as traders, the question is we know that it's important. We know that consumer spending is important, but how market moving is it? How tradable is it? Because we always want to relate it back to trading, right? We always wanted to relate it back to what it means for trading and whether we can trade it, because I know a lot of you like to live trade with us. We live trade non-farm payrolls, we live trade the inflation report, we live trade the Federal Reserve meeting. And so how market moving is the retail sales report? Well, one great way to find that out is to go to the really, kind of powerful economic calendar that our partner Think Trader has. Think Trader, for those of you that are into prop trading, Think Trader is a prop firm that is powered by a broker. It is it's powered by a broker. It's available for US traders. You can trade directly on TradingView. You could connect to your TradingView account, use Zip, use BK Scalper, use Bounce. And it's got they basically, as a broker powered platform, they bring to you institutional professional grade tools that would otherwise cost you a ton of money. So one of the things that I love is their economic calendar, because it tells you the potential impact of events and how tradable they are. So the most important event this week is going to be the US retail sales report. And so they have this little icon here that says volatility. And this is available to all, to anyone who has who've bought a Think Trader evaluation account. So anyone with a Think Trader evaluation account gets access to the platform. So you can get access to, this little indicator and this calendar that they have. So if you go and you click on volatility, we did this for non-farm payrolls. We did this for the inflation report. We looked at how market moving each of those events are. And this is for retail sales. So retail sales in dollar yen, 5 minutes after the retail sales report. What kind of impact do we have? Last month, 27 pips. Not impressive at all. The month before that, we did have a very big boom, 116 pips. And but for the month before that, and generally 30 pips, 27 pips, not a significant amount of continuation. But let's see, and the top here shows you how bullish or bearish the market was already going into it. But let's see, 15 minutes afterwards, you get more continuation. No, we didn't get more continuation last month. We did get a little bit more continuation the month before, but the months before that, 50, 38, let's just double check what it was before. Okay, a little bit of continuation in dollar yen in the months before that. And let's look at 1 hour afterwards. So 1 hour afterwards, we got a little bit more in dollar yen, no more in June or July, and a little bit more in August. So what does this tell us? This tells us in dollar yen, which is the currency that we think is going to be the most sensitive to retail sales. We did have one blowout month. We had one blowout month that was huge. And that month was because the market expected only 0.2% increase. And we had a huge rise. Last month, the market expected a drop and we had an increase, and yet the movement was pretty much nothing. And the months before that, this one was this was flat, and they're basically not far from the deviation. But it was really this huge month where it was expected 0.2, came in 1, that led to so much volatility in the markets. And you can see what's really cool is you can see the days that it was at and the potential price action. Click on them and see, what happened. But for dollar yen, this tells us as traders not to expect much unless it's a huge blowout report. and maybe not to expect much in the way of continuation after that. Let's take a look at Eurodollar. Where is this? Eurodollar. Okay, so with Eurodollar, you can see that with the Eurodollar, once again, we did not have much movement 1 hour after. They were still in the 1 hour. I mean, look at this. On September, it was expected to be negative. It turned, I don't even remember. It was expected to be negative and turned positive. And we had a 17-point move in Eurodollar. We had a 30-point move. You want to skip this because this is an anomaly. 30-point move in Eurodollar in July and a 30-point move and a 20-point move in June. So really not that market moving at all. So this tells me that, retail sales is interesting, but it's certainly not as market moving. We know it's not as market moving as the non-farm payrolls report. But let's take a look at the inflation report. So in the inflation report, 5 minutes after the report, Eurodollar didn't have a huge movement, but dollar yen, where's dollar yen? We had a larger movement that was kind of consistent with about 40 to 60 pips of movement 5 minutes before. So we did have a bit of movement, and we actually, caught at the initial movement. And then we did not have a much continuation. We had a little bit of continuation, not much continuation after. But still, all of this tells us that the inflation report is more market moving than the retail sales report. So if you remember last week, inflation, it wasn't really all that. There weren't that many fireworks off of it. There should be even less fireworks off of the inflation report. So so that's the idea. We'll look at ECB in a minute, but that's the idea with dollar, where I am bullish dollars. And I think, retail sales, we did have stronger auto sales, gas prices, according to consumer prices, they were higher. So we should get, a okay report. But and also non-farm payrolls was great. So the report, should be more dollar positive than dollar negative. And I think for the most part, the dollar rally should be sustained, but it is getting tired. So there's probably just as much upside as downside. Although for the time being, I'm still bullish dollars until I have a strong reason to think otherwise. So retail sales is important, but it's not going to be a game changer for the Federal Reserve. The retail sales report is just basically, it's not like inflation. It's not like non-farm payrolls, which has a very, very big impact on whether the Fed's going to do 25 versus 50. Retail sales is important for GDP, but it is less important for the Federal Reserve. What's very important this week, also very important, is the ECB rate decision. And you can see that on bearish euros. Euro is trading lower today ahead of the ECB rate decision. The ECB, they're expected to cut interest rates. Will they cut by 25 or will they cut by 50? Boris, can you do me a favor and pop up a poll if you think that the ECB is going to be cutting by 25 or 50 basis points? Now, every month when we have a big rate decision, I prepare this table here. And this table puts me into the shoes and helps me help you get into the shoes of the central bank. So we look at, all of the big important components of the economy and how it changed from the last meeting in September. So the last time the ECB met in September, they cut interest rates by 25 basis points. And, we kind of knew they were going to do another one, but they were kind of wishy-washy, non-committal. And it really took the stronger U.S. data to drive the dollar, basically higher and the euro lower. So 25 or 50 basis points. Well, let's take a look at the calendar. At first glance, you can see that there's more red than there's green, meaning that there's more deterioration than improvements in the Eurozone economy since the last meeting. So there's a lot more red than there are green. But let's kind of dissect this. Okay, the consumer spending, the whole consumer spending block is green. That means that consumers spent more, and quite a bit too. I mean, German retail sales are up 1.6% month over month. So they spent quite a bit more in August than they did in July. And so that's going to go well for the economy. And a lot of it though is kind of, summer travels as well as the Olympics in France and the residual effects. The labor market deteriorated. There was, Germany reported more layoffs, but the unemployment rate for Germany and the Eurozone itself remain unchanged. And the inflation front, this is where it's really important. This is where this is the reason why the market thinks that the ECB needs to do 25, maybe could do 50, because everyone is fighting inflation, trying to get it towards 2%, trying to get it below 3%. And in the Eurozone, the core inflation rate is already below 2%. And the headline inflation rate in Germany is already below. It has already been below 2%, moved more below it, down to 1.6%. So inflation is already below the central bank's target. And they probably, they want inflation around 2%. They don't want it much more. They don't want it at 1%. They want it around 2%. If it gets to close to 1%, or has any risk of going to 1%, they're going to want to cut interest rates more in order to drive it back up. Now, I'm not saying they're in that position right now, but that's their thinking. They don't want inflation down to 1%. And if it gets anywhere near there, they're going to be alarmed. On the business activity front, trade is a little stronger, but all the PMIs, all the ZOOs, all the IFOs, that whole section on the bottom is bearish. So that is also supporting a case for, a ECB rate cut, either 50 or 25, and a commitment to do more. The DAX is, and the market indicators, the DAX and the German bond index is stronger. So, but unlike the Federal Reserve, if you remember, before the last Fed meeting, the yield component was already down quite a bit. So it indicated that that the bond market had already done a lot of the work for the ECB. But in this case, the German bond yields are actually up. So that's actually not good for the ECB. So that could, support the case for a bigger move. I am not saying that they're going to do a bigger move. I'm saying that this at least tells me that because they haven't, ECB is not a central bank, likes to surprise the markets. They haven't signaled a bigger move. So I'm saying that they are going to probably cut interest rates by 25 basis points. But what all of this does suggest to me is that even if they cut interest rates by 25 basis points, there could be a very good chance that they could telegraph more to come, that they're not done yet, that they remain dovish and they leave the door open for additional easing. So let's take a look now at what the potential market impact, how market moving is ECB. Well, let's see if we get some information here. ECB rate decision, volatility, Eurodollar. Now, the ECB rate decision, remember, has two parts, as the rate decision along with the press conference. And usually the press conference is more market moving than the rate decision, because the rate decision is completely baked into the market. So ECB rate decision, interesting. This is interesting. 5 minutes after the ECB rate decision, basically only a 15 pip move in Eurodollar. 15 minutes, we were getting some bigger moves, but still nothing really that significant. 1 hour, I went to 4 hours. 1 hour afterwards, 30 pip move. And 4 hour afterwards, it's not a huge move. So, ECB, you think it's very market moving, but it doesn't seem to be exceptionally market moving. Let's see about the press conference. The press conference, 5 minutes after, not much of a mover either. This is 9 pips. It's not a huge market mover. 1 hour after, not a huge market mover either. You know what I'm kind of interested in is, what does it mean for Euro yen? Ooh, look at that. What does this tell us? This tells us that Eurodollar is not the one that's moving, but Euro yen is a much better trade. 1 hour after, even if we go 5 minutes after, not so much. But what this also tells us is that while we may not get a big move 5 minutes after, if the market starts to have a reaction, it should have a continuation 1 hour after in Euro yen. I personally love to trade the crosses. What about something like Euro Aussie? Euro Aussie, well, Euro CAD is probably a little bit more interesting. Not really. We're going to go to 1 hour after Euro CAD, we only get 36 pips. So if you're trying to figure out what should I trade, Euro Aussie is a much more market mover, 53 pips, 40 pips 1 hour after. But Euro Yen really looks like the trade to be in. Euro Yen tends to be a big market mover after the European rate decision. So this calendar is so valuable in telling you whether or not you really should be in the market to trade an event and what currency pair you should select to trade, depending upon whether you want to ride the initial move or you want to wait for the initial reaction and then trade the 1 hour movement afterwards. So very powerful calendar. It is available to all Think Capital traders. And if you buy a 25,000 valuation and up, you can get ZIP and the gold indicators for 1 month free. So definitely use our coupon code. Click on the link that Boris put into the chat box because they have some really they basically have the exact same terms as all of the other prop firms, and the same drawdowns, the same, they allow you to trade news, they allow you to trade EAs, they allow you to trade on TradingView, they accept US traders. The cost is lower. If you want to add on, for example, a more generous drawdown, and if you feel like you need a bigger drawdown limit, that you can add that on, and that would only be up to the same cost as FTMO, for example. So definitely check them out because there's a lot of powerful tools in addition to backtester. There's their own signals that you can poke around with and see what they offer there. So I'm bearish euros going into the ECB rate decision, but euro is also getting quite oversold, and we'll look at some technicals levels there. This is a huge week for the UK. The UK has all of the data this week is going to determine what the Bank of England does. Now, we know from what they've told us that they want to cut interest rates, and they've even indicated to us that they could be more dovish, that they maybe need to have a bigger move. They maybe need to accelerate their interest rate cuts. And all of that will hinge upon all of the economic data that we have. We have UK retail sales. We have UK employment. We have UK jobs report. And so if we go to the calendar and we just look at UK, for example, where is the UK? It's the bottom of this list. If we just look at the UK and we get rid of Euro area, US, you can see, I'm just going to look at this quickly. The UK inflation report, tends to be a good market mover for sterling and UK inflation. You remember Euro area inflation. What did we see? Euro area inflation was already below 2%. UK inflation is not, and the core inflation rate is at 3.5%. And so, they have a long ways to go. They may not cut as much as we think, or maybe they only cut 25 and they telegraph more, or they do 50 and they telegraph more. This could be a monumental point for them. And then what did I click on? UK retail sales. You can see how market moving UK retail sales is and decide whether that's more tradable. BOE, sorry, I'm clicking on random things. BOE rate decision. You can see the potential impacts. I don't think this is accurate, but the employment report, you can see, the potential impact of that. You can just poke around. But in general, this is a very, very big week for UK data, and it will determine how much the Bank of England cuts interest rates and whether they will do more. And, that is why I'm, even though I don't trade pounds, I will be watching the pound data very closely. I only trade pound through euro pound. Boris, why don't you close this poll? I got, it seems like everyone agrees that the ECB is only going to cut by 25 basis points. I think that's right. I don't think that they're going to do more because usually what they telegraph to the market is what they will get. I'd love to ask the question, how many of you trade prop? Yes to forex, CFDs, yes to futures, or yes to no, or no. Let's see if you guys actually trade prop or you trade your regular broker account. So the worst performing currency today is the Australian dollar. What's going on? We know that the RBA is the least dovish central bank, and yet Aussie is weakening. The reason why the Aussie is the weakest currency is because Aussie is a proxy for China. And China reported weaker trade data. Over the weekend, they was supposed to have a huge announcement. They said that they were going to do a huge fiscal announcement and it fell flat. I remember we did the stream on Thursday when we live traded inflation, and someone asked me if it's going to be another, I don't even know what the word was used, but just another disappointment. And it turned out to be another disappointment. They were absolutely right. China is under delivering. They're just doing little bits and pieces, not enough for the markets. The market is disappointed. That is hurting Aussie, which is a proxy for China. Australia itself is doing great. Australia, the RBA is not looking to lower interest rates. The economy is doing okay. In terms of data, we have the employment report from the Reserve Bank from Australia this week. And so the employment report is very, very important. And so, it's significant. We are watching this, and that's the most important report for Australia this week. And then Canada, we have Canada. I'm bullish Canada. The Canadian dollar. It's unremarkable how dollar CAD. This is the 9th. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 straight days of gains from the for a dollar CAD. So it also means 9 straight days of losses. And yet Canadian dollar has been great. Canadian data, the employment report on Friday was hot. And oil prices, they are rebounding off they're retracing off their highs. The only reason why dollar CAD is so strong is because of the US dollar. So in my opinion, the first currency pair to fall, and if the dollar turns, that I'm going to be all over is going to be dollar CAD, because fundamentally it deserves to be trading lower, not higher. And I think it's getting very, very overstretched. And I am bullish CAD, waiting for it to turn. For New Zealand, RBNZ cut interest rates by 50 basis points, suggested more to come. And so I firmly believe that they are going to, that Kiwi deserves to be trading lower. It's already trading lower. It's already overextended. And we don't have, this morning with the PSI numbers, which came in right in line with expectations, but I'm still bearish Kiwi. There's nothing going on for Switzerland this week, but we had a lot of Swiss data, which was negative. Swiss inflation data, Swiss employment data, all of that was kind of bearish. And so I think that is also going to weigh on the Swiss franc. And then we also have the yen, on neutral Japanese yen. Japan was on holiday overnight. And so, I think that for the most part, we are in a situation where the yen is just going to trade on the market's risk appetite. And I think, the risk appetite definitely shows us that we are going to be in a situation where the central bank is basically going to not raise interest rates at their next meeting. I mean, that's basically, what we are looking forward to. All right. So what else is on the docket? Let's now look at the calendar, and then we'll go through the charts quickly. So taking a look at this week. So this week we have Sunday, sorry. So taking a look at this, we already had, a few pieces of reports released. We had Governor Orr speaking and say anything market moving. Services PMI from New Zealand was right in line with expectations. We had actually Chinese data, but that was weaker. With trade data from China, that was weaker. Swiss inflation data, which is weaker, which is why I'm bearish Swissy. Today, we have no data from the US. We have some Fed speak. Tomorrow, we have the UK labor market numbers, and the UK labor market numbers, job growth slowed in both the manufacturing and service sector. So, that is expected to be weaker as well. We have the ZOO survey. Now, the ZOO survey last month was very weak, 9.3, 3.6. It dropped a lot If you look at this table, it dropped from here down to here. So small rebound is expected because data really hasn't been that bad. Industrial production is expected to be a little bit stronger. Canada has inflation data, and Canada inflation data is expected to drop because we had lower price component of IVPMI. So that could send dollar CAD up a little bit more. We'll see. But after that, I still think dollar CAD is due for a retracement. U.S. Empire State expected to be weaker. And then we have UK, we have New Zealand inflation data. With the New Zealand inflation data, food prices did move slightly higher in Q3, but given that the RBNZ cut a lot, this could end up being a little dovish too. We have UK inflation data that is expected to be weaker. I mean, there's got to be a justification for why the Bank of England thinks that they need to be more aggressive, and I think that justification is going to come in UK data. We also have Australian jobs report Wednesday evening. So we have Australian jobs report Wednesday evening. I'm going to be looking forward to that. And, we can see from the Australian report, the market expects a slightly weaker release, but still job growth. And we did have lower PMIs, and last month was very, very good. So there's a good chance we could have weaker data and actually add pressure in the Australian dollar. And then Eurozone on Thursday, we have the ECB rate decision. That's the main event. That is the same day and around the same time as US retail sales. So, it's going to be a very, very big event and very, very market moving. So there's going to be a lot going on. You have first the ECB, how much they're going to cut at 8:15 New York time. Then you have U.S. retail sales 15 minutes later. And then 15 minutes after that, you have the press conference. So it's going to be very, very high impact, big day for the markets. And we already talked about what we're going to expect. And then Thursday evening, we have Chinese GDP, industrial production, retail sales. It's a big night for the Australian dollar because Aussie is a proxy for China. And then we end the week with UK retail sales and some, housing data from the US, which really won't be that market moving. Taking a look at the charts, let's start with Euro. So Euro, obviously oversold, big moves. We have support not far from current levels, pretty much right at current levels. We have the 50% fib of that move. And that move was the April low up until the September high, right at 109. So a really important fib level. And we could bounce off of this. ECB is not until Thursday, so we could bounce off it. Although tomorrow, like I said, we've got the German zoo survey, so that is important. So we get stronger zoo that could bounce before it, kind of trickles lower. So watch out for this fib. We need to close below this low here, which is, what is this? 109 even for a move down to the 200 SMA. But technically, there's more scope for a bounce than a rally, even though overall downtrend is lower. So that's how you kind of got to fuse fundamentals with technicals. And if we look at my ZIP, euro dollar is still in the sell zone, but this is a bit of a reversal candle right at these lows here. So I would not be selling at this point. Sterling is also oversold, and we've got a big move lower. And in terms of sterling support, let's see where the fib is. Fibs are important. They matter. The fib is underneath current levels. The fib is at this low here, which coincides with the 38.2% fib. And that is at 130 even. So sterling has about 30 more pips to go, and I think it should test the support level, and maybe and it all depends upon how data is. But we are mostly expecting weaker data from sterling this week. Dollar yen looks like it could rally more, but it is also getting overstretched. We have a bit more room to 150.80. 150 is a round number. Dollar yen struggles around round numbers, so it could struggle above there. But right now, the path of least resistance still looks like it's 150.80 for dollar yen. Dollar Swiss, you can see with dollar Swiss, we also had a very nice pro-dollar day today, and with dollar Swiss, it looks like we have more room to go in dollar Swiss than dollar yen. 87 is resistance in dollar Swiss. So that means that, if between the two, dollar Swiss looks like it could go further. Aussie dollar, Aussie fundamentally is not as bearish as some of the other currency pairs, but technically has been quite bearish because of China. And their support at the 100 SMA is 66.90. But I think maximum we'll see at maybe 66.50. I don't expect much more downside in Aussie dollar. Kiwi dollar, on the other hand, is quite bearish. I like Kiwi as a short much more than Aussie. And Kiwi, we do have support at 60.50. If we close below 60.50, we have a much more significant movement lower. If we close above the 100 SMA, 61.20, that's when we have a more significant move upwards. And then last but not least, dollar CAD. Dollar CAD, as I said, very strong uptrend. And this is this 9th consecutive day of gains. We are already above this high here. So where's the next stop for dollar CAD? The next stop for dollar CAD is probably going to be somewhere around here, 138.50. There are no fib. I mean, the levels are too high up. So there's no fibs until 138.30. We can see if there's another fib from a longer term level that would be interesting to watch. Maybe something from here. No, nothing from there. So 138.50, I think, is pretty much it. 138.50 is the resistance level. It's the swing highs from here. It's also the 78.6% fib from this level. That's where resistance is. It is not far from here. So that's the level I will be watching. All right. So that's basically the outlook on a fundamental, technical, and the basis. We're right at the New York Open. I'm going to let Boris to say hello. I'm sure he's eager to live trade with you. It seems like, most of you trade your own account, but, about 50% of you trade prop or both. So as I said, if you're looking at, forex CFD prop, Think Capital is a solid partner. They're powered by a broker. They let you trade on TradingView. They accept EAs, news. They are pretty much the same cost, slightly lower, even better with our 10% off fee. And they have some really powerful tools, and they accept US traders. So definitely consider them for forex CFD. And for futures, our partner is Apex. And so you definitely want to be looking at Apex for, futures trading. Boris has been using them to pass the prop with all of the traders. So, pretty, exciting things there.
As a matter of fact, here's my Apex trades for this morning. But let's not forget Think. I got to tell you something. Over the weekend, I completely rewrote my trend trader indicator, which Kathy is giving away as part of if you sign up for a Think $25,000 account, you're going to be able to get this particular indicator as well as her zip indicator, which means you can trade CFDs both on Forex and indices. And I'm going to preview a little bit about how I rewrote it, how it works really, really well with essentially DAX, NASDAQ, US 30, and gold, picking out one trade per day in a perfect structure. You're going to be able to have full access to it. It's just going to be really, really nice. All you have to do is simply sign up for a $25,000 Think account, email me your screenshot of your purchase, and I'll be able to send you this link, and you can have it. Just simply click it and add it to your favorites. I'm going to talk to you a little bit about it. I actually made a whole video on it, so I'll share the video with you guys. And as a matter of fact, I'm going to share the video with you guys right now, so you can have this as a tool. This gives you the full description of the video, but I'm going to show it to you right now before we kind of start trading live on our futures account. Let me just kind of share with you this really cool new version of Trend Trader, designed primarily for CFDs. We're going to look at the Think. Let's take a look at the gold. Where are we? Where's gold here? Let's take a look at gold. And the very cool thing about Think Trend Trader structure is I actually created templates for you. So all you have to do is just choose an instrument, choose the instrument, make sure that the chart is on the instrument, and the indicator itself will show you exactly where the trades are. The basic concept is very elegant and very simple. First and foremost, the template tells you my preferred time of trade. And if you're looking at gold, my preferred time of trade is between 4 o'clock New York and about 8 o'clock New York, the primary liquidity time for gold. And there are two components to the trade. Basically, what you're looking for is what's something called tonality, which means what's the broader underlying tone of the market. And then you're looking for a short-term move in a direction of that tone. So in this particular case, for tonality, we're using the 15-period moving, the 15-period MACD value. And all of it, by the way, fully configurable by you. You want to use a different moving average MACD value, you can certainly adjust it over here. But I've given you what I consider to be really good default parameters, and you don't have to do much in order to be able to kind of get the proper signals. In addition to which, the long-term period moving average, which is my trigger moving average, is set to 200. Now you can also modify that. You can even modify the times for the start and the finish of your preferred time when you want to trade. But again, as I told you, I've already preset everything. I've already set everything for you for 2 targets. It's all done there. So if you stay with the defaults, you will do very, very well. What's going on over here? Hang on a second. Hey, why am I? Are you guys hearing me? Hang on a second. What's going on with Kathy here?
We're hearing fine. I don't know what's going on, Boris, but you can keep going.
No, but I only see. Are you guys seeing me on the chart?
Yeah, we're seeing everything. There's nothing wrong. You're perfect.
Okay, for some reason I'm seeing. Okay, hang on a second. Hang on.
Are you while Boris tries to figure it out, there's nothing wrong.
Wait, are you seeing my chart? Are you seeing my chart? I don't think I see.
Let me remove my chart here. Now we're seeing your chart. Is that what you want?
Yes. Okay. Yeah. Okay. For some reason, it was just weird. Okay. No, for some reason, I saw just only you in a stream. Okay. I just want to make sure you guys are all seeing me very well. Okay. You see me, hear me. You see the trend traded chart. So very, very simple signaling indicator that I just kind of wanted to share with you. What you see here is you can see gold going negative. And the template gives you the short target and a long target as well. So the short target is $5 in gold. The long target is $10 in gold. Just to give you an idea, if you're doing like one lot in gold, let's say on a $25,000 account in Think markets, that's $500 or $1,000 on a full second target. Just 10 points. It's really, really very effective as a single trade day. And more importantly, it even gives you several entries. You see, any entry here is a legitimate entry on the sell side. Comes in here as a nice trade. Let's take a look at so far the US 30 and the NASDAQ charts are not going to set up, because they're going to set up the template for that starts out actually very late. This is going to surprise many of you. Starts at 11 o'clock in the morning. 11 o'clock to 3 o'clock in the morning is when you want to trade the U.S. indices. But you can see this is from Friday's structure. You can see how the buy signals over here worked really, really well for a 50-point target in US 30 and a 100-point target in a second target. Same thing with NASDAQ. Let's say we'll take a look at it for the Friday structures over here. Here's the NASDAQ trades over here. Let me just set this up. Sorry, I forgot to. The very important part is you just want to make sure you synchronize the template with the chart. It was important to remember that. You can see there's like literally 3 or 4 or 5 entries for you to make 25 points in NASDAQ. There's a little bit of a dip and then a secondary wave. I generally suggest that you simply take just one trade of this indicator per day. Super easy, and it becomes very, very, very effective for you as a kind of a passing tool for either Think, or even for those of you who want to trade Apex and don't want to scalp. They want to do just one nice big trade a day. This is a $500 to $1,000 trade per day per instrument. You have 4 possibilities. Sometimes you don't get any trades in an instrument, but you have 4 possibilities. So at least 1 or 2 of them are going to trigger a signal. And the best part of it is that all of it is alertable. So you just simply configure it. You can configure it into your charts. You can say, give me an alert for a buy, give me an alert for a sell. You don't even have to really watch the charts. It will just pop up and give you the alert, and you'll be all set up to go on the chart. So really, really cool. I hope you guys enjoy it. It's my gift to you, as long as you sign up for Think Markets in terms of structure, and I'm happy to give it to you as a giveaway. Okay, so let's go back to our business at hand, and let's talk a little bit about scalping here and talk about everything else. Let me just kind of sort of pause here, make sure you guys are all clear. Sorry, for some reason I thought I saw some. Hang on a second. You know what, guys? Just bear with me a second. I want to make sure that I have my my broadcast here. For some reason, okay. For some reason, the broadcast on my YouTube channel was all off. That's why I was watching Kathy. Now I see you guys. You guys are good to go. All right. So hope you guys really enjoy it. It's a really, really cool indicator. I'm actually curious, while I have you at it, let's do a poll, because this is hopefully going to be useful to you guys. Would you let me just make a poll here. Would you prefer to trade a scalp, to trade, and then let me just give you the choices. Scalp or 1 trade per day? Let's we'll do a new poll, because I'm curious to see how many of you guys are going to like the new structure. In addition to which, I was very, very busy this weekend, and I completely redid the Scalp Trader, which is also available to everybody. All you have to do for Scalp Trader is to simply join us. Let me put the link in for our for our service, or if you want to get into my coaching service, which is a huge discount. It's basically like a massive discount to our monthly fee with my coaching wrapped in. So it's the best deal possible. I put those links in there for you. Hopefully you guys can enjoy that. And I redid the whole Scalp Trader thing. So now, hang on, just give me a second. I just want to do one other thing here, guys. Okay. So I want to talk to you a little bit about how I redid the Scalp Trader, and hopefully you guys really, really enjoy it as well with a new version. So give me just one more thing. Everybody sees me well. Everybody hears me well. You guys are all following me, right? Just give me a yes, yes, yes. I just want to make sure that all is good, because nobody's commenting, nobody's talking to me. I just, always want to make sure that you guys are good. Somebody give me a we see you, we hear you comment. And everybody, please vote in this poll. It's a really important poll, because I'm really, really interested. Hey, Miguel, thank you. Really, really important poll, because if you're, depending on how you guys are interested, I might create different lives, YouTube lives that kind of focus on a single trade structure versus just a scalp structure with you guys. So definitely, everybody weigh in on this poll. Let me know how you guys are feeling about it, whether you want to do 1 trade a day, you want to do scalping, all that kind of stuff. Okay. All right. Thank you, Sangar. Great, great, great. You guys are all coming in. Good to see you. All right. So I want to talk to you about scalp. And here's the thing. First order of business. No logic has been changed. Don't freak out. Don't worry. The rules are the same. I just made it super easy as far as presentation. I think the change in presentation of this indicator makes it so much easier to execute the signals. Tell me if you agree. I'm going to kind of run you through it basically and show you. So in our scalping indicator, we're basically trading with trend on a very, very short-term basis. We're trying to extract small but highly, highly probable trades with the general trend. We define general trend as the 200 period SMA. And every time we get a buy signal above that, we're going to be looking for that as a potential trade. And, a sell signal below that, we're going to be looking at that as a potential trade, right? So originally I had buy labels, and then I had what I call the follow-on trade, which is the follow-on trade, as you can see here visually, is you have a buy label, you have a little bit of a retrace, a dip in the red, and then a recapture of the 8-period moving average. And this particular green triangle, that's the follow-on trade. That's the entry trade. We did this for a couple of reasons. Number one, when we get an alert, this buy setup label alert, it comes in at the end of the candle. So you have to react right away to kind of execute the trade, because sometimes the trade can run away from you. So that's sometimes very difficult mentally to get the alert and execute almost rapid fire execution. So it's much easier to get the alert and then pre-prep yourself. Like right now, I have an alert over here, right? We have a scalp buy alert here. Get the alert and then kind of pre-prep yourself for the next wave up, right? The next wave up. In other words, this little green triangle, red, green structure, and try to trade that to the upside, right? So the follow-on trade, just from a logistical point of view, is a easier trade to do. But before that, I never really marked the follow-on trade. It was just kind of assumed, well, you got to wait for this, and here's the thing. Now I've marked the follow-on trade. Please tell me you find that to be much easier to see. Please tell me I didn't waste my time this weekend coding, because I really want to make sure you guys really, really, and this is really useful to you as a follow-ons, as a presentation signal. So give me some yeses, give me some love here if you think that that's a good signal, right? Now, the second presentation thing I did, which I absolutely love, but you don't have to. By the way, here comes the follow-on trade. Now, this gets very, very interesting. Would I take this follow-on trade? If it was my druthers and I wasn't talking right now, I would be shorting this. I'll explain to you why I would be shorting this and why this would be a great short in a minute. But that's an advanced level trade. So let's stay with the simple, basic, fundamental rookie trade that everybody should be doing, which is the follow-on trade. So the question I had was, yes, Irma says she loves it. If you've been trading scalper with me, this really, really makes it easier. But here's the second thing I did that I really, really love, which is, here's what I did. I got rid of all the sell signals above trend. Now, you can get them back. You can just say, unclick this, which means show signals with trend only. Now it's going to show you sell signals as well as buy signals. It's going to show you sells in here as well as buys. But tell me that this is not a much cleaner, easier way to looking at charts, where all you're looking at is buy signals. This, by the way, massive freaking candle. Jesus Christ. I'm not taking this candle. Should I take it? I'm like really torn up here as to whether I should bother with this Kate. Let me explain to you why I'm hesitant to take this trade, but on the other hand, I kind of could. There is 1, 2, 3, 4, 5 buy signals already. We've had a very, very strong trend. On the other hand, this is like 15 minutes into the market. Tremendous amount of momentum on the market. So maybe, all right, I'll play the game. Let's see. All right, I'm in trade now. Maybe this will work for me. Just missed me. And I kind of knew it would. Let's see if it retraces back on me. But it's very likely going to stop me out because I knew it was going to be just the last gasp of the bulls. Maybe I'll get lucky on this trade. This is not a trade I love taking, but I'm just taking it for you just to show you the follow-on trade and how the signals work here. All right. I took myself out at half a point because I knew this was kind of a bullshit trade, and one I did not want to follow through. But why so much oscillation in my decision-making process? Well, because like every indicator, this is just a signaling software, and the ultimate interpretation is on you, right? There are some basic fundamental rules that create a general structure for how we trade. So yes, if we're above trend and we're the first 1, 2, 3 signals, the probability that those signals are going to be really, really strong, very, very good. I'm happy to take those, right? But the longer it goes, the more problematic it becomes, more overbought it becomes. You can literally see the overboughtness of a product, the more continuous, labels you have, right? All of that is countervailed by the market open structure. So it's, you have to understand what time of the day it is. It's 9:30. Lots of people still want to be buying. There's enough momentum here to maybe kind of push it, to the highs. That having been said, one of my bread and butter trades that I absolutely love to do now, and again, this is an advanced trade. I don't recommend you guys doing it, off the top of your head, and especially if you're not comfortable. You have to have two things in your personality to want to do this kind of a trade. One, you got to love to be a contrarian. If you're not a contrarian, if you love to just go with trend and just trade trend, and there are lots of guys in my room who love to trade trend, just trade this. I mean, trading trend would have worked. And by the way, you see, I gave myself up a little bit early because I thought it was kind of overbought, but the momentum was still there. So, my experience of just sort of forcing myself to buy momentum overrode any hesitation I had about the fact that it was, grossly overbought. But back to the contrarian trade. If you have in your DNA, if your DNA is kind of like, I want to be a contrarian, then a very, very good trade. And again, by no means is it going to work all the time. By no means is this a slam dunk. But a very, very good trade that I love to do is when we're grossly overbought, 4 or 5 buy trade, labels in a row, or 4 or 5 sell labels in a low. I'm going to wait after I get the follow-on trade signal. I'm going to wait for the first red bar, and I'm going to short the living F out of it. And I'm going to try to bet on the fact that that's going to give me a very quick scalp retrace trade. So until I get a red, I'm not doing a damn thing. But if I get a red move, I'm going to try to short this at this point because it's pretty much overbought. To give you an example of this on the reverse side, look at gold over here. I'm going to show you gold. Gold was 5, 6 red labels to the deep, right, to the deep red, and I waited for the green green zone to materialize itself, bought it over here, and made a nice clean reversal scalp. So again, these are things to be done only if you have a contrarian mindset. And obviously now that we have so many green labels in here, same kind of idea with Nasdaq. I kind of everything is breaking out. Everything is really skyrocketing now. So the opportunity for us to maybe see a little bit of a scalp retrace possibility could be possible. By the way, 58.90. We're going to go to 5,900. I cannot believe this crazy market. I've never seen a market this crazy around. But this is why you trade your setup. You don't trade your opinion. It's truly incredible at how powerful this market has been. But I guess in some ways it makes sense because the Fed is super bullish. Yes, you want the prop guide? PRP. Hang on a second. Let me see if I can find you the prop guide. PRP. Yep. Here's the prop guide for everybody who wants to learn about prop trading. And by the way, guys, now K is off the feed, so I can tell you, if you guys get Apex as well as Think, I don't care whether you get Apex or Think, just sign up for one of them. I'll give you the trend trader for Apex as well. So if you want to do a single trade per day structure instead of scalping, and by the way, it looks like were we pretty evenly divided? Hey, look at this. It's like a Trump Harris poll, 50-50. So 50% of you want one trade a day, kind of a signaling indicator. Yeah, just get either Apex or Think. Send me a send me a screenshot of your purchase at contact@bktraders.com. I'll give you the indicator and the video together, so you can know exactly how to use it and how to configure it, and you trade it in my heart's content. I'm more than happy to let you guys do it. There's something wrong with my feed here, but it is what it is. I will. It's like a really massive delay in my feed here, but as far as me looking at it, but it doesn't matter. You guys hear me, you guys see me. So look at this. We are pumping, right? We're pumping to the 5,900. Now we're going to go to 5,900, get red. I'm definitely going to get short this thing. On Apex, 50,000 and up, it doesn't matter. Just go be my guest. By the way, here's the Apex link, so you guys get the discount. Here's the Think link. If you guys want to do CFDs, please do either one. You want to do both, be my guest. You can use them. You can use it for both. But really good deals. I hope you guys enjoy it. Karen, would you say, Karen, you're in Discord? Please. You guys are. If you guys are chatting in Discord, I can't see you. So please chat in YouTube Live with me if you guys have anything interesting. Or I'll come back into Discord for those. Those of you, by the way, who want to join my Discord. Oh, she says ignore me. Okay. Those of you who want to join me, here's the link for our Signal service. You can subscribe right then and there. Okay. YM. So YM, by the way, actually much less overbought. What's YM? YM Scout. Oh, YM Scout buy. Oh, very, very cool thing, by the way, right? So I was going to tell you. So you're going to get, you're going to get the alerts, but they won't be visible on the chart unless they are in congruence with the longer term trend, right? So like here's YM. Let me just take this off. If I don't show the signals, you'll see the buy signal over here too, right? Here's the buy setup. Here's the sell setup. Scalp buys. Oh, sorry, MYM. I'm on the wrong. Here's the MYM. So here's the buy setup on MYM that showed up. But like if there was a buy, if there was a sell setup above the moving average, you'll see the alert, but you won't see the signals. It's kind of cool. It just kind of tells you the alert, and you can always double check it if you want. Okay, I want to go over here. Oh, here we go. Okay, so again, not for the amateurs over here, and don't do this if you're not a contrarian trader, and don't do this if this doesn't turn red. This has got to hold red. I got 42 seconds left, but if it holds red, I'm going to short this. I'm going to short this because I have 6 greens, in front of me or behind me. It looks overbought, and I have a reasonable chance here for a small scalp retrace move after a very, very massive buy up. 22 seconds left. I'm going to wait very much until the close of this candle. The one thing that's really, really important when you're doing a contrarian trade is you want to make sure that there is actually a sell zone that's happening, because very often in these strong trends, you'll get these tests, and then eventually it'll turn green at the last second. Okay, no, so it actually did just to join ask. Let's see if I can sell it. Okay, I'm short 93. Target is going to be 92. Stop's going to be 96. Let's see if this plays out. and sometimes it doesn't. And the whole point of contrarian trades is that you're sometimes going to eat eat your first attempt, because the first attempt came very, very close, very, very close, and then just came back against me. So we'll see. We'll see if I have enough breathing room, but it may stretch to 96 and stop me out, which is fine. That's why I said this is not a trade for the faint of heart, and not a trade you want to take if you don't have kind of a contrarian mindset. But I love this trade, and I continue to do this in continuous fashion. In other words, if this trade doesn't work now, it will work on the next round and the next round, and I'll be happy to capitalize on it then. Very, very strong uptrend, obviously. So the retraces here are going to be very shallow. I missed it literally by a tick. I could have taken like kind of a half tick profit on this thing, but now it looks like it's going to go. And that's going to give me a seventh buy signal. So now I'm going to be very, very happy if it gives me a second opportunity for a sell to come back and trade it. In the meantime, I also probably have. I'm going to look at this very carefully. I'm probably going to have a much better even opportunity in NASDAQ. So I'm going to watch NASDAQ right now, because again, same kind of idea. 1, 2, 3, 4, 5 buy signals, right? In here, does a final stretch back up, which is fine. I'm going to let it do its thing. I think with the S&P, the reason why it's just skyrocketing so much is because it really, really desperately wants that round number. And I knew that trading, shorting in front of the round before the round number is a much lower probability trade than shorting after the round number. But on the other hand, maybe the bulls aren't going to be able to get it through the 5,900. We'll see. Let's give it a little bit of time to to watch it. Okay, Zenworth, sorry, they must have changed the terms. It's still very, very cheap to buy the 250 for 125. I'll make a change in my in the message. Thank you for letting me know that because they changed the terms probably at the end of September, and I still hadn't updated the message. But yeah, I mean it's 125 for 250 is still a really, really good deal. Or you can go down, you can go down to a lower structure. All right, let's watch NAS. Let's watch S&P. We're sort of well past the original buy signals. So I'm not doing any more buy trades here. But I'm really looking for another red break to kind of trade this to the downside. Yes, 200 moving average, very, very strong. I mean, it's a super, super strong trend. There's absolutely, no doubt about it. Just remember, everything looks great until 10:30 in the morning, and then after 10:30, somehow it always goes the other way, right? So one of the beauties of the market is if you watch it long enough, you understand that what looks beautiful now is going to look very ugly an hour or two from now. I'm flipping around between ES and NQ, just looking for reds, looking for opportunities here. Might give us 10-15 minutes before we get any kind of reds. I'll slow down a little bit here. But you can see me trading. If you sort of do the classic trend thing, which is just buy, you're doing very, very well, right? You start screwing around counter trend, you have to, as I said, you have to have the mindset and the confidence to trade counter trend. But it's a really fun trade when it works. Also, I got to tell you, oh my goodness, look at this thing. What a monster. Oh, fuck, no way, really? Oh, man, look at that. So the other thing that you guys may be interested in is, I posted this in. Sorry, I'm just watching this. I wonder if let me see if I can find it here in my Discord, and I'll show you. I want to just find the message. Just one sec, and then I'll show it to you on the screen. My continuous trade algo, which we have I can't tell you how cool it is. Oh, here it is. Yeah. So let me show you my Discord, guys. If you want to join us, feel free to join us anytime. As I said, I put the link in there. So let me go into the Discord, into Ask Boris, because I posted this on Friday. This was the results. This is my algo trading last week. This is $100,000 account. This is my continuous algo. Trades German, trades gold, trades NASDAQ, trades US 30. Now, the coolest part about this is it turns on and off during what I call optimal times of the day. So it will trade gold from like 4 till 12, NASDAQ from 8 a.m. till about 3 p.m. New York, I think, right? 3 p.m. New York, right? NASDAQ and US 30. US indices from about 8 in the morning till about 3 in the afternoon, and then turn off and then start again by itself the next day. So fully automated trading. It's $100,000 account. Last week's results, swap included $11,000. Starting out this week already very, very strong. I rewrote huge parts of it in terms of logic, and then Doug rewrote all of the functionality of it, and just beta testing my last version. Those of you who already have it, I know, just hold on. I will be doing the full demo webinar next week, not this week, or probably next week, maybe like midweek of next week, because I just want to make sure that everything is good, and it's going to be awesome. I think you guys are going to really, really love this. So the structure for this, just kind of let you guys know. People are asking, the first question people ask me, how much money do you bet? If you have $1,000 account, you make $2 trades. If you have a $10,000 account, you make $20 trades. And if you have a $100,000 account, you make $200 trades. And the idea here is, you're probably going to make 10, 15 trades a day, right? Let's say 4 times 4, between 10 and 15 trades a day on a continuous basis. So you have a potential to make like $2,000 a day. There have been days where this thing had made like $6,000 because it caught every single trend move going forward. So very, very excited about this, because this is something that people have been desperate for, which is, how do you create a fully automated system? And it's been really, really hard to create one, but now it's really working well. So I'm kind of very happy with it. All right, back to our bread and butter setup. So here we are. So buy setup. Am I getting a red zone? This is interesting. So, one other thing, guys, and I know you're going to tell me why am I getting a green candle right after this? There is a tiny flaw in the new BK scalper in terms of sequencing. So sometimes it will miss the follow-on trade signal. I'm going to fix it, but it's it is so minor that I figured it was much better for me to release this to everybody in BK as a structure than just to try to get it. I didn't want the perfect be the enemy of the good. It's good enough to really work well. So, I wanted to give it a shot. All right, I'm going to trade NASDAQ with you guys on the short side. As soon as, nope, not getting the signal. Look at that, nice and, no, let me see. It's got to stay red. Okay, red, sell market. And come on, baby. All right, and we're going to go S&P. All right, short S&P a little bit here. Let's see if the S&P works. All right, so, come on, baby, come on. All right, now this is what I was going to tell you. So S&P worked on the second time. NASDAQ worked on the first time, right? Again, you have to have a contrarian mindset. Sorry, where's my NASDAQ? Here's my NASDAQ. Here's my NASDAQ. You guys see the NASDAQ? You see the S&P? You have to have the contrarian mindset, and you obviously have to have the probability in your favor. Okay. the best analogy I can give you, because this comes from Vic Sperandeo, who was like a market wizard from the 1980s. I mean, really old school guy. If you guys haven't read any of the Market Wizard books, I highly recommend it. And by the way, I have a super treat for you guys. November 16th, nobody really knows about this. We haven't, there's been no publication about this yet because we're just putting it together, but I'm doing my annual Trader Fest, and I have 2 Market Wizards coming into my to my Trader Fest. I'll let you guys know. I'll put up the links. They'll, in about a week or 2, we're going to start doing publicity for the whole thing. But Vic Sperandeo used to have this great analogy for how you handicap the market, and it was basically like the same way you handicap a human being. So the younger the human being, the greater the probability that he grows stronger, that he grows bigger, that that he gets going to get better. And then as you get older, right, as you get just mature, right, there's very high probability you're going to fucking die, right, to put it very simply, or you're going to the probability. So the idea of think of it in the crudest possible sense, but it's just a perfect, I think, probability analogy. If you're 45, your chance of living to 46 is pretty high. If you're 95, your chance to living to 96 is not so high, right? Now, yeah, of course you could, but the probability is probably like 10% of the probability of the 45-year-old, right? And that's what you're betting on. You're betting on the fact that 90% of the time you're going to fucking die, okay? To put it simply, in a sense that it's not going to go green forever. It's going to get red. And that is what I bet when you're doing the contrarian trade, this way. To put it in incredibly crude and terrible terms, but I think very effective in terms of you trying to understand what I'm trying to do. Yes, I am. I'm going to drop it into Discord. Let me see. I'm actually going to just show it. I'm going to show it to you guys. You guys can see my Discord here. Is this one? SCLP? Is this it? Let me see. I forgot my. Okay, this is the new scalper. No, shit. No. I'm sorry. Oh, here it is. Here's Sardis. Okay, I put this in there. The new scalper. This one. Oh yeah, this is correct. I did put this correct. Okay, this one is bullshit. This one I need to delete. Okay, so I just put this in there. So yeah, everybody who's in my room can get it, and everybody who wants to join me, let me put the link in here, right here. But anyways, it's kind of interesting when you think about handicapping markets the way you handicap human beings, right? Using actuarial tables. There's a much more elegant way of saying that you're going to fucking die if you're 95 years old. You know what I'm saying? Same idea with the markets. Like the probability that this red was going to work was much higher than the probability that this red was going to work because it's much younger in the bull process, right? You see what I'm saying? Everybody following me here? All right. Thank you for voting in the scalp and the one trade poll. I got them both. So I absolutely love it. As I said to you, you guys want to sign up for Apex, sign up for Think. I'll give you the trend. You want to come join me? I'll give you both of them. I mean, I'll give you the scalper and the trend when you're part of the family. No, actually, I can't give you the trend. You guys have to do a prop account. But most of you guys who are trading with me all have prop accounts. We're all trading prop accounts. Anyways, please tell me you love the new version of Scalp. I mean, how much easier it is to pick opportunities here. How much easier it is to kind of just trade with trend and counter trend. How much easier it is to remove all the, sell noise, the sell label noises out of here, right? We're just looking at just clean, clear trades here without any significant effort. I mean, I'm up like $500 since this morning, literally just, in the easiest possible way you can imagine. Like, where am I now? Yeah, I started 252. I'm at 252.630. I mean, geez, it's like it's a piece of cake. It's been a piece of cake. Let me see. Yeah, super easy to pick this up. And I think a lot of it has to do with just the clarity of presentation. It's not, the logic stays the same, but when you make the presentation much easier to absorb. To get into my Discord, you just have to be a member. Yeah, I'll send you a link here's the link to my membership, and you just if you become a member, then you can be part of our Discord, and you get all the membership perks in there. Let's make it Ask Me Anything Monday, where it's Columbus Day. Markets kind of, I think, are going to chill out a little bit. Pretty powerful move here. I will say to you, I absolutely do not doubt that they're going to run the 5,900. Maybe this was all she wrote, but I just don't think so. And here's what I want to show you. So here you see how you get a sell label, but if you go to NASDAQ now, you don't see the sell label. The reason you don't see the sell label is because it's above the moving average. So it's not polluting your mindset. You're not sitting there going, oh, I want to sell in an uptrend. You can go see it. You can be my guest. You can play that game if you really want to. Here's the sell label, but look how eliminating the sell label just doesn't tempt you to do stupid shit. I love the fact that it just keeps me honest. There'll be plenty of sell opportunities if this thing drops below the 200 SMA. If this thing unwinds, as I said to you, half the time everything looks beautiful till 10:30 in the morning, and then then we're going to be minus 1% by the end of the day. We can get there. It's all possible. When it gets there, it will show itself up. We don't need to kind of, I think, get obsessed with sells, except when they are really good counter trend trades. Right? When you get 4 or 5 greens in a row, then you can try to trade the sells. I hope this all really makes it so much easier. The visualization tools, I hope you guys find them really useful. They make trades very, very simple. They make trades, I can't say they make them easy, but they make them simple, and that gives you lots of opportunity to clip pips or clip ticks. I'm trying to see if I had any. I don't think I did any. I did not do any. Did I do any? I'm just trying to see if oh yeah, we did a little bit of trades. Yeah. Okay, so this was. Oh yeah, this was fun. So just to show you again my contrarian mindset, right? Show you my contrarian mindset. This is my contrarian mindset in action, right? Which by the way, kind of was stupid as hell, by the way, because I had to get out of this trade early. But this trade worked really, really well. Okay, here's one that worked pretty well. So 3 sells, to the downside. Should have actually been over here. I was a little bit late, but I did buy this one. That was a nice clean, contrarian trade to the upside. This one was another 1, 2, 3, 4 sells to the downside, and this one really tested me hard. And as I said, just like with S&P earlier, the first trade may not work out. So if you got stopped out on this trade, I did not get stopped out on this trade. The second trade over here worked really, really nicely, right? And then you had two more continuations, to the downside, where you could have taken more trades, back up to the upside. This is my own personal prejudice. I love contrarian trades. So do not by any means think that this is how you should be doing. You are more than welcome to simply do nice, clean continuation trades. Sell comes back up to the moving average, regains its selling momentum strength. Here's a continuation trade that works. Here's a continuation trade that let me see if this is 98. Yeah, 98. You have a 15-point stop, and it comes back down to 93. It still works, right? And then eventually, here, as I said to you, when they start getting to the buys, there's plenty. You'll find plenty of buy. Like once it gets up above the moving average, the buy trades become obvious. You don't need to do lots of buy label trades. The buy label trades will work above the moving average. The sell label trades will work below the moving average. And you could just switch your conditions once the indicator works. And you see now the buy trades really, really, really take off. If you're in the middle of Asia, you can just clip them all the time. And of course, having the follow-on triangle makes it so much easier for you to be able to, to clip the trades, right? 1, 2, 3, boom, boom, boom. Actually, like 3, 4, you like 3 or 4 continuous trades here, all the way into the European Open. As it really, really trades strongly. This is just actually, if you just did nothing but trend trade this whole thing continuously, you just made a ton of money in the European Open until about 6 o'clock, and then you could have faded this thing. So I just think it's very, very cool at how the new structure works. It gives you lots and lots of opportunities to trade both with trend and with counter trend, as long as you stay true to the cause. So let me know. I don't see any comments, any questions, anything else. You guys like this stuff? Give me some love in comments here. Let me know what you guys think. We don't have any more opportunities into the morning so far, but we will see. Cheryl likes it. Yeah, I think those of you guys who've been trading scalp with me for a long time hopefully find this even more useful. As I said, logic hasn't changed, but presentation hasn't. A lot of times presentation, makes a huge difference. The best thing about the presentation, in my opinion, is it keeps you from making stupid trades, right? You don't get tempted by the sell labels above the moving average or the buy labels below the moving average. Like there's no need. Just trade the buys above, trade the sells below, trade with trend most of the time. And you want to do counter trend, only do it when the move is really, really mature and the move is really, really extended above the moving average. When the patient is 95 years old, don't try to short a 35-year-old patient. God, I know this is sick, but so I'm just hung up on the actuarial analogy because it's just such a good one from Trader Vic. It makes it so clean and clear of how you want to trade probabilities. So good. Miguel likes it. Mujib likes it. Everybody likes it. Okay, guys. Another good session to review. $100 here. On the S&P, we had $50 here. This one I got clipped, but then I recovered it all back. So it's like $1.50, and there was another $1.50 here. So we didn't have too many trades, about 3 or 4 trades today in live session. I'm up about $500 in the overall session. And I had a pre-market while Kay was talking. When she talks, I can't interrupt her. I had the reversal trade here, which was another $50 to the good. Here's gold. It's kind of interesting. Gold has been really down most of the day, right? So we finally break to the upside here, right? We have a buy set up over here. This trade over here, I think, may have 74.7. No, 77, and this one was 77. Yeah, this actually, as weak as this looks, this actually would have worked for the 5 ticks, because you came in at 77, it went to 77.8. You certainly would have made it. But you see how now it just completely collapsed, and now it's back down. And it looks like gold is, going to be much more of a sell trade than a buy trade right now, right? So, keep watching it. And then, the other stuff, of course, I will let everybody know about my free ODP webinar, my webinar for the ever trading algo. But I'm very, very excited about that. It's doing really, really well. As I said to you, it did $12,000 last week. Let me see what it's doing today. Oh yeah, look at that. It's about $500-600 on the continuous basis already today. And the one a day trade is also doing really well. So just a lot of really cool stuff, a lot of cool products. I mean, very, very excited to make all this stuff for you, to make trading easier for you. So hopefully you guys will come enjoy it. Everybody have a great time. Let your friends know. I'm going to be trading. I'm going to put up the links. I'm going to put up a little bit later today, but we're going to trade Tuesday, Wednesday, Thursday, hardcore scalping all the way. We'll also review tomorrow today's trend signals for Think and for 1 a day swing trades. I'll review every day now. I'm going to review the trend indicator to show you how well that works, so you guys can take trades on the Think Markets prop account, which is really designed for much more, in my opinion, for those one a day. Just think about this: it's a $50 trade or a $100 trade. You need $350 to pass the test. It's essentially a week worth of good signals, and you've passed the target on this. Whatever ratios you're working on. If you're doing, it's a 5,000 account, that's a 350. I think it's 50,000. I guess it's going to be 3,500. You just simply increase the ratios relative to the account size. I'll take a look at exactly their targets, but I think all the targets are uniform, irrespective of the size. Which, by the way, that's another interesting thing. So I love trading futures prop, and I'm a huge Apex trader, so I trade Apex all the time. But if you're thinking CFDs, one other interesting aspect of CFDs, I believe. Let me not speak out of mind. Let's go to Think Capital. Let me see their rules. Yeah. This is very true. Okay, so it doesn't matter what account you take, right? Here's the $100,000 account to a $5,000 account. This is one thing that is definitely a key advantage of CFDs. In the CFD land, it doesn't matter whether you're trading a $5,000 account or a $100,000 account. Your drawdown to target always the same. You got the same. You got to your loss limit is this, your target is this, right? Whereas in futures, the smaller the account you're going for, the better the deal is. The larger that's why 250,000 account, so much greater an effort to get that funded than it is to get like it's literally 3 times as hard to get a $250,000 account funded as it is a $25,000 account funded, right? So that's sort of interesting for those of you who are considering CFDs, or in my opinion, do both, which will be fun. On the flip side, futures, you just get, you hit your target, you're done. On CFDs, you got to do 2 or 3 tries. You have to go through 2 or 3 trials in order to get this, 3 phases to get it funded. So there's, positives and negatives to all of them. They're really a lot of fun, and I would enjoy both of them depending on what you want to do. All right, we're kind of back, as I said to you, if we're looking at where things are, they really want to run the 5,900. I mean, I may hang out with you just for a couple more minutes just to see if they're going to run the 5,900 on the S&P, because that'll be fun. Because if they run that 5,900 and then go red, I'll short that again. I'll be happy to short that again. When doing ThinkApp, should you choose TradingView or Platform Farm? It really doesn't matter, Gordon. Well, okay, no, let me ask you a different question. Are you going to hyper trade? Are you going to scalp Think Capital, or are you going to just trade? Are you going to just trade kind of like my trend trader 1 trade per day thing? So that would be it's a qualifying question to that. If you answer that question, I'll give you which one you should be trading. You're not sure yet. Okay, well, so let me give you a decision tree. If you're going to scalp trade, and by the way, if you're going to scalp trade, another thing I'll be happy to give you if you sign up for Think Capital is my proprietary MT5, MT4 scalp trading software that allows you to buy and sell with stops and targets built right into the thing. So it's super, super fast, and it's just as fast as you see me doing in Tradeovate. It's kind of like a Tradeovate applet version of this thing for MT5, MT4. Happy to give that to you as long as you sign up for Think Trader. If you are not going to scalp trade, if you're just going to do 1 or 2 leisurely trades a day, you can easily do TradingView, as a thing. And of course, if you're using my trend trader in TradingView, if you're using Trend Trader and TradingView, you could literally trade directly from TradingView and place orders right here in TradingView, so on and so forth on the thing. Let's take a look at, so I'm actually curious. So let's look at gold today. Where am I, gold? Just the only thing is, just don't forget. I always do this myself. You have to make sure the template matches the instrument. Okay, so gold, gold did very well. Let's do German. How did German do today? Now we're going to just do German. Here's German. Okay. German was really, really choppy today. I'll be honest with you. So German had German today was really not a great looking trade, because if you got long over here, and if I'm long 21s, what would be my stop? My stop would be, I generally like to trade these things, and this is up to you how you want to run risk. You can do 1-to-1 risk. You can do 1-to-2 risk. I would never do more than 1-to-2 risk, but 1-to-2 risk I think is reasonable. So if you kind of ran 1-to-2 risk, you actually managed. If you went long here at the beginning of German, you were looking for 25 target, 50 stop. You survived the 50 stop. You had all of this just choppiness, and you eventually hit the target here. I think the other thing that's really cool about CFDs. Correct me if I'm wrong, but I think you can actually do this. This is something that I totally forgot about, that you can do this in CFDs. You could be long here with the 50 stop, short here with the 50 stop, and actually would have made 25 points both ways, because this 29 would have hit over here for plus 25, and this 21 would have hit here for plus 25 over here, right? Would have been very, very cool. So yeah, it would have worked both ways as a trade here in the German. And that's the cool thing about trading it from TradingView. Then you just you have no problems. It's very, very simple. You simply go into Trading Panel, you go into Think Markets, log into your Think Market account, and can trade using my indicator off the charts. But if you want to use MT5, happy to do that, and you can also scalp using my structure. Oh, we're there. Did we hit 9? We did hit 9. Okay, so remember I told you they're gonna run the 9s. Now it gets interesting. Let's have one last fun thing to do here. I think I'm not sure. Okay, that's why I don't want to speak out of turn. I think maybe allows for hedging, but I don't want to speak out of turn. So here we are. We hit the 9, 5,900. I'm waiting for this thing to go red. We're gonna just give it plenty of time to let it breathe. For one last contrarian signal. Let's see if my contrarian signal, occurs. Because, you got to be a degenerate after all, right? Anybody trading Think and knows if they allow hedging both ways? Let me know. I'm kind of curious. All right, see, now we're getting a buy setup, which is why you always want to be very, very patient on the structure. So I'm very, very patient here on the trade. This was 96 and it dropped to 91. Yeah, it really dropped hard. By the way, this is a good example also of why after 4 or 5 consecutive buys, you can be right in the direction and wrong on the trade. Because look what, if you bought this, the labeling over here is a little bit off. I'm going to fix this labeling for you guys, but the labeling here was a little bit off on the move. I think what's happening is there's buys going on here that the labeling is coming off here. This is a small fix that I will do before the end of the week, hopefully. But regardless of how you look at it, the signals are still really, really great as far as just visually showing you when to come in, when to come out. What I'm doing right now is, because we've had 1, 2, 3, 4, 5, 6, 7 greens, we hit the 5,900. I'm just waiting for it to exhaust itself. I'm waiting for it to correct. I'm looking for the red zone, and I want to take that red zone signal as my kind of one last shot for the scalp. Nasdaq, by the way, much weaker than the S&P here, right? Kind of interesting. But this is, by the way, one of those things that you very much take away from the forex market. They love to run round numbers. If you're close to a round number, you're going to hunt that number strong because once you break that number, all the stops are going to go. See, all the stops are going to go right now, right? And once they collect all the stops, that's when they're happy to bring it right back down and correct it, right? I actually have a buy signal in the YM, 41 seconds left. A very legitimate one because this is like 1-2 labels after this, and you can see that that it's a follow-on signal. I don't really love trading the YM, but it's a tiny little trade. We can certainly give it a shot if it holds. It's got to hold. But you see how now it clearly defines. Here's the buy setup. Here's the the signal. I'm going to join bid. See if I can buy it. I don't think I was able to buy it. Nope, I couldn't get it. No, it went through. Sorry, no trade on this one because it went through the target. I was trying to buy it on the bid. Should have bought it on the. I should have bought it market, but if you bought this market 74, it went all the way out to 78. Would have hit target. It's fine. Let's go back to looking for the reds on the S&P. What are you guys trading, by the way, primarily? Actually, let's do like one last poll. I'm really, really curious here. Okay, I'll find out, Gordon. I'll find out for you, Gordon. Let's do like one last poll. What instrument do you trade the most? I'm doing US 30 ES because that's the equivalent. And then let's say gold GC. I'd love to know, actually. It's actually an interesting thing. And I know I'm doing all indices, but that's what we trade here live. If you're trading FX, well, actually, you know what? Let's add forex as the fourth option because I'm just curious how everybody's trading. The YM, by the way, popped way back up. I should have taken this trade, but should have followed my own signal here. But I really don't trade YM that much, so I should have just simply showed it to you as a signal. But the key thing is you trade what you're good at. I think is the key thing. The other thing I like about this new reconfiguration of the setup is I can just trade Nasdaq and the S&P and be perfectly happy. Clipping $800, $900 a day and just moving forward. Pretty even, except Nasdaq leads the way. Interesting. Really interesting. So everybody wants to trade Nas. Nas, unfortunately, does not have any kind of signal for me right now. Well, it's a little bit late on this one, but this would have been actually a relatively decent buy signal. Why would this be like a decent buy signal? Because it's kind of a, we had a big corrective mode here, right? So if you had a buy setup signal here, that would have been actually a pretty decent move here. But I'm still obsessed with my red S&P move here. It may take me a couple of candles here for it to do a little bit of a contrarian move, but let's see if it comes down into the red zone. All right, let's see how we do it. 902. Still holding bid. Really impressive on the S&P. The cool thing about this, I think, from a visual point of view, is that I'm not trying to guess the top here, right? If the indicator isn't giving me a red zone, I'm not moving. And think of like how intelligent I was. I would have been trying to short here and short here and short here, and I would have just been eating stops because none of it, I would have just been, guessing prices instead of looking at signals. And that's exactly what this is designed to help you minimize, which is guessing prices. You want to be looking at signals. So NASDAQ leading. NASDAQ definitely is everybody's favorite instrument. Well, it's a great instrument. It's got the biggest volatility. What's the wow for, Trung? What's the wow reaction for? All right, finally getting into the red zone, but we got to hold the red zone, right? Got to hold the red zone. It's not. Just have to be very patient stalking this little trade here. Also, guys, it's like Kate did say, it's Columbus Day, right? So after, like, Europe's going to leave right now, right? Europe's going to leave in about an hour. And then after that, none of the bank guys are around. I think liquidity is going to be much quieter for the rest of the day. And we'll see, we'll see what happens. All right, starting to get a little red. 10 seconds left, 9 seconds left. All right, let's get organized here. Go to the ES. Okay, join ask. See if I can get that trade going. I should have hit market. I try to get cute here with the ask. Let's see if I'm in there. I'm in at 902. All right, let's see if this gets me done. So 902, 901 is my target. again, to explain for those of you who may be joining us late, not for the faint of heart, and not the proper trade that you should be doing. But this is kind of my own personal trade that I like to be doing. Only if you have a kind of a contrarian mindset, really don't mind, selling tops, buying bottoms, and then eating the stops if it goes your wrong way, and then having the right game plan to repair those trades. You absolutely cannot get emotional about this country. Oh, I'm going to share with you like one last thing that is like a great statement that we should all be thinking about. I'm going to share it to you in just one second. But anyways, the structure of this trade is we've had very strong buy-ups. We've actually crossed the key 900 level. And now we're looking for just simply a corrective mode. Now, the corrective mode, there's so much buying over here that they could still pop it to like 905, 909, 906 before you get the corrective mode. So this particular, red zone corrective mode may not be the wave that corrects me to profit, which is okay. I'm perfectly okay eating this loss and then reconfiguring myself at higher levels if I have to at the proper time to try to come back and repair this trade. But the key thing I actually wanted to share with you guys, this was a really good statement. I really thought this was, because I think this really encapsulates exactly how all of us feel. And if we can just internalize this, here it is. Anxiety isn't the same thing as uncertainty. Now, this was just a headline I saw on Real Clear Markets, and it has nothing to do with anything. But I thought it completely encapsulated the very idea of how most traders think about uncertainty and confuse it with anxiety. So this trade is full of uncertainty, but if you're trading it professionally, there should be no anxiety. Okay, yes, you're perfectly willing to know that you might have to eat it. That's why you size it properly. That's why you have a game plan for a backup. That's why you know exactly what the backup will be. You don't just randomly then trade in revenge afterwards. As long as you're fully cognizant that uncertainty is the lay of the land, you can reduce your anxiety. And I think the reason why so many of us make the mistakes is because when we're faced with uncertainty, the anxiety rises tremendously. That then causes huge amount of problems. So I thought, this was like a really good statement for everybody to remember. Anxiety isn't the same thing as uncertainty. Hope you guys agree on that. Anyways, I'm still floating this thing, still at 9:02. It may take us a couple more minutes. I actually have to run because it's running super late today, and I got a meeting. I'll update you guys tomorrow. All the links will be up tomorrow for all the rest of the sessions for the rest of the week. I hope you guys really enjoy everything, and I will see you later. Everybody, here's the final links for everything. If you sign up for Think, as I said. If you sign up for Apex, I will give you the Trend Trader for free. So come, just do that. Email me, and I'll be happy to give you the links exactly. Everybody have a wonderful day. I'll see you guys tomorrow. Everybody enjoy. Take care.